see that there's really no chance for these patterns to touch. You have long moves down and you have long moves up inside these channels. Now here's where, because of the distance between this support and resistance, you did have a breakout through the support, but it didn't really follow through that much to the downside. Also, a clue is when you get a 4 initial trend, that means there's a weak trend, and here you have a breakout of only 1. So this is why this market is not following through to the downside. So when you're doing your filters, make sure that you have a strong enough initial trend and make sure you have a strong enough breakout to support the type of trading that you want to do. Okay, in the US 200, or this is a small cap, you can see that this market too, the way the markets have been trading recently this week is there's been tremendous up moves and tremendous down moves, and that's why we have such a wide channel. Okay, when these patterns aren't really working as well as they should, this shows that there isn't a real lot of upside momentum. Matter of fact, the breakout was so weak that it doesn't even show up here. The trend was so weak that it's less than 6 bars when this initial trend began. So these are the types of trades you can see that you want to really avoid, because the market may not be suitable for a trending market at this time. Now that brings us to why we want to search for non-trending markets. Okay, now a non-trending market is one that is characterized by sideways action. Okay, and so while it looks like this morning that trending markets are not giving us very good signals in the stock indices because of it's basically not a trending market now in the stock market. It's sideways and it's whipsaw. So maybe by looking for non-trending markets, we'll be able to see better opportunities. So in this case, what we're doing here is we're searching for non-trending markets, and that's the ascending triangle, descending triangle, also the rectangle pattern, as well as the pennant pattern. Okay. Now what you can see with these characteristics is of a trending market or a non-trending market is that you have this compression taking place. You have a wide support and resistance, and then it begins to compress. The reason why I favor the triangle pattern is because I'm able to pinpoint almost precisely when a market's going to move out. Now I'll move back quickly to this PowerPoint slides, and I'll go to the non-trending patterns, and what we'll do is I'll show you up close what a non-trending pattern looks like. So in this case, here's a non-trending pattern which is called the ascending triangle. You can see that there's a strong initial trend into it, and then it slowly started to show a compression of support and resistance. As this market begins to compress, it's almost pinpointing or telegraphing you that a breakout is coming. Okay, that's the characteristic of a non-trending pattern. All right, it plays well with volatility because remember, volatility slows down and then it gets stronger. Okay, now with here's another triangle pattern. You can see with the ascending triangle, you have a flat support and you have a steep decline. Okay, and what happens here is as this compresses, you could wait and be patient and then wait for volatility to kick in. And so this is really pinpointing an area that the market's going to move. And all you have to do is wait for the market to pick its direction. All right, so if you're a type of trader that wants to trade breakouts and has the patience, then the non-trending patterns are the ones you want to look at. And the same with the symmetrical triangle. Compression and then finally a breakout. Okay, you can see the difference. In the channels, you have most of the break taking place from resistance down to support. When you have a non-trending pattern with a triangle, you can wait until the market is so compressed that it has to make a move. Okay? Now, the other pattern we would look at is, say, a pennant, which shows, again, the compression. And a rectangle can be actually both. This is a parallel line. But because it's sitting sideways, I like to call it a non-trending pattern, and the longer it stays inside this range, the greater the breakout that's going to occur. Okay, now go back to the live action. So that's the reason why you want to have both trending and non-trending searches. Okay, Obviously, this morning with the choppiness in the stock market, trending patterns aren't working. Now, if you ever have a question as to what you're looking at, you can always click on that I button, and it will tell you the characteristics, when it forms, and what it suggests. Okay, so you always have that opportunity to go through there and select that, and you'll get this information. All right, so we'll switch back to live. So now that I've selected non-trending patterns, I want to look at what's happening in the stock indices from a non-trending standpoint and see if there's any fresh signals developing this morning. You can see from these orange dots that it looks like there's something in the UK, the FTSE, and maybe some of these currencies. But here's what's happening in the stock market. If you remember this week, we've had choppy trading. Okay, so this is why we're having an almost clean triangle pattern. You can see that the range was large, and then it slowly began to compress. And we had moves up, and we had moves down that failed, but it helped establish our support and resistance. As this market began to compress, you can see that it's pinpointing to exactly when this market's going to make its move. So if you're patient enough, you'll see that we're getting a breakdown through support at this time, and we're looking for a break in this Australian 200 market, that Australian CFD, and we're looking for a move here. Okay, now if we look at the stocks 50, we're also getting, you can see a whole list of triangle patterns here. That means that this market has been compressing in just about every index that we look at. Okay, here's a case where, again, wide range compression, and then boom, we get a breakout through. Candlesticks begin to increase, they get to thicken. You can see here during the sideways action, there's no real bodies to these candlesticks. And then finally you get the breakthrough, you get strong momentum, and you're getting bigger candlesticks, and it hits into the target zone. So I hope you can see that there's a difference between your success and failure depending on the market conditions and which trading style you pick. All right, it's a very quick search. If you separate the two from trending and non-trending, if you start to see that the non-trending or the trending patterns aren't going anywhere or aren't hitting targets, then obviously you want to switch to non-trending patterns. And usually the market will rotate that way. It's going to go through periods of trending and non-trending, and it's going to rotate back and forth. The same with periods of high volatility and low volatility. You're going to get this constant rotation. So in order to be a successful trader, set up your searches so that you can get in tune with that cycle of trending and non-trending, and that can improve your trading results quite a bit. If we look at the Dow, which was trading action earlier this morning, okay, we've just opened in the U.S., so we may start getting some signals coming up here fresh. But you can see here that once again we have compression in the marketplace on this triangle, and then saying, okay, maybe you don't like to trade this. It looks awful. There's just no activity going on. And then all of a sudden you get this compression and the market begins to make its move. Okay, this one required patience because it took time to get down to the target zone. Sometimes they drop pretty fast. But with these triangles, you have to expect quicker movement. Now if we move over to the FX currencies for non-trending, you can see that we have a descending triangle identified in the Euro Japanese Yen. Okay, if there's been compression in this market and a breakout today, you can see that one just started shortly, maybe a little while ago. All right, this is set for U.S. time. So you can see that we have this flat bottom, which is the support, and we have this diagonal, which is resistance, and this forms the descending triangle. Again, it's a non-trending pattern. Sideways action causes the compression, and when the tighter this gets, the greater the possibility of a breakout. And you can see that based on the size of these candlesticks, it was very narrow, and then finally you had a big thrust to the downside. Okay, so you're looking for, when you get a breakout like this and it's high, this is a maximum 10 bar, you want to make sure that you continue to get follow-through trades on it. So I hope you can see that there's a difference between trending and non-trending. Again, trending, you're getting channels that produce long moves inside the pattern, and then they take slow, methodical moves on the breakouts. When you trade triangles or non-trending patterns, you tend to get compression, which are difficult to trade inside, but once they break out, you get a pickup in momentum. Now, here's what it looks like on a 30-minute chart. Now, it looks like Euro-Japanese yen is also giving us a signal on a 15-minute chart. Okay, they should be almost exact mirror images, except that the time period is longer. Yeah, you can see that too on a 15-minute chart, that, again, the compression, the tightness, and then finally the breakout and the speed of the drop. Okay, so that's a good example. Another thing I want to say is that when you have a 15-minute chart, make sure that you have a long length. Okay, 15 minutes is going to generate more trading opportunities, but if you use, say, a length of 25, 30, or 50 bars or candlesticks, you're going to get more choppiness. So the longer the length for a 15-minute pattern, usually the more successful the move, because what it's done is it's given the market enough time to compress, which allows more traders to see the pattern, and they provide the fuel to drive a market lower. If we look at the U.S. Swiss franc on a 15-minute chart, this is only 23 bars, so we'll have to take a look at this to see if this gave us a successful move or not. Okay, it doesn't look too bad here. Again, key characteristic, non-trending, compression, and then a breakout, and you get a follow-through to the upside. So these are the characteristics of these completed patterns and these breakouts. If you are patient enough, you can select this emerging patterns, and this is going to tell you patterns that are taking place, like the triangle. Okay, as I showed you, the triangle seems to be the best for momentum. So if you have a whole list of markets like triangles, for example, this looks like it hasn't really fully developed into a triangle yet, and that's why it's on the watch list. Okay, now this is the one that you may want to sell resistance and try to buy support as it develops. Okay, that's what an emerging pattern does. Here's a Euro-Japanese descending triangle. Okay, this is going to show you a situation where it's developing here into a triangle. You can see this compression is taking place. So if you picked up this in your analysis this morning, you'd put it on your watch list and say, okay, I have this compression going on. Now how do I want to play it? And what you do is you wait for the market to make its move. All right, you have confidence that breakouts to the upside are going to hit a target, or breakouts to the downside. So this should be on your watch list, this Euro-Japanese yen 60-minute chart, and you should be waiting for something to take place because of this compression. All right, and finally look at another one here, the Euro-Japanese yen on a pennant. This is a 15-minute. And it should show us basically the same thing, that this market is compressing and it's going to get ready to make its move. Oh, we already did here, so it broke out to the downside. And we're looking at, again, this type of pattern where you have tight formation and a breakout. That seems, when you compare it to what we saw on the non-trending or the trending markets, it looks like the non-trending patterns seem to have a little bit more volatility in them today than the trending patterns. All right, that wraps up the 45 minutes of the market analysis. So I'll answer questions that you have now and see if there's anything I can help you with at this point. So let me go to some of these questions that we have here. And let me blow this box up a little bit here while we talk. Okay, so hopefully you can see that there's a difference between a trending and a non-trending pattern, and a lot of it has to do with the trading conditions. If you notice that intuitively you have a situation where the market is trading sideways, and I'm sure you've seen this week that we've had strong up moves in the morning in the U.S. equity markets, followed by failures at the end of the day. Matter of fact, yesterday I think we had an up, a down, and then finished with an up move. When you start to see that action or that choppiness, you immediately should start to think about non-trending markets, and that's the reason why you should have your list set up the same, so that you can search for these non-trending markets right away. If you find that you can show that that there's a trend in the marketplace, then of course you want to shift to that scenario. Okay, I have a question here is, can you show how you would set up for a